Welcome to the book, How to Select a Stock in 30 Minutes. The quick guide to picking winning stocks. This short book is for every trader and investor who already have a stock in mind and want to reevaluate if the stock is a good investment or not. Also, this book is for people who are looking for complete new stock to invest in. I see that a lot of investors and traders do not have the training on how to easily select a stock or check the stock if it's interesting to invest or trade in. For that reason, I'm writing a small short book to assist people in selecting a stock in 30 minutes. This short book is for every trader and investor who already have a stock in mind and want to reevaluate if the stock was a good investment or not. Also, this book is for people who are looking for a complete new stock to invest in. My way of selecting stocks is based on the CANSLIM methodology with a little twist of my own. First, I will explain the CANSLIM methodology and then my own. Furthermore, I will teach you in 6 steps how to research and value a stock in 30 minutes of your valuable time. We start with the CANSLIM methodology. CANSLIM was designed by Mr. O'Neill and was used for the selecting of growth stocks using fundamental and technical analysis techniques before buying a stock. CANSLIM is a system which can be used for the selection of high-valued stocks which are on the edge of increasing in value and price. This selection can be used for trading as well as investing. However, that is when you interpret it in my way. Normally, the original principle was for long-term investing only. So what is CANSLIM? CANSLIM is an abbreviation for 7 criteria that a share had to meet before you bought it. Each letter has its own criteria. C. Current quarterly earnings, annual earnings. N. New product, service, or management. S. Supply and demand. L. Leaders or laggards. I. Institutional ownership. M. Market direction. Letter C. There has to be an increase in quarterly results, quarter over quarter. The higher the better. This should be going on for at least 2 years. If for some reason there is one quarter which is not in line, it doesn't matter as long as they are back on track the quarter later. Letter A. Over the last 5 years, there should be a growth of 20% per year. Asterisk. The black marked letters C, N, S, M are marked because those are being used by my way of researching stocks. Letter N. The N is for new. People, also investors, love new things. This will help in getting new positive energy to help the stock to increase in value. This can be new products, new management, or a positive event that might cause for some fantasy in the company and stock. Letter S. The amount of stocks available in combination with the demand may cause a run on stocks and an increased stock price. Letter L. Who is the leader of the company? Do you trust him? A wise man once told me if you can't find information about the guy, just look at his picture. Do you trust him? Would you let him date your daughter? No? Well then don't invest. Letter I. The letter I is for institutions. Watch out for too many shares being owned by big institutions. There is no money being made here. Letter M. The most important one. The market. Always check the market where they operate in. Is it a growth market? Good. You're good to go. Is it a market with low margin, highly competitive with decreasing or flat market growth? Think again before investing. My look on CANSLIM. Overall, I like the CANSLIM methodology. The reason is that it's an all-round research tool which let you look at a lot of factors which are important to have been reviewed before starting to invest in a certain stock. For a fast stock selection, however, the CANSLIM methodology might be too long and too time-consuming, in my opinion. Furthermore, as addition, since the markets are changing, I want to add another letter, the letter G. In total, for my way of stock researching in 30 minutes, I'm using the following letters: C, N, S, M, and I want to add one, the letter G. CNSMG. For a fast selection, it's important to check the quarterly numbers and check if they are growing each quarter. Nothing is perfect, so if there is one number which does not exceed the expectations fully, I don't care. It's the total picture that counts. As long as there is a structural growth, which is managed properly, I know I will be fine. New. I love the word. A new management, a new headquarter, a new product, it just gives that additional interest to T. He's stock. Also, people always love shiny new things, so when I read the quarterly results, I'm always checking, what's new? Is it interesting or not? That is something to look out for, because investors will get in when they see glistering new stuff. Next to that, I think supply and demand is always important. If you are the only one who wants to buy, you will not make money. One more last thing I already mentioned is the market. If you invest in an okay stock which is operated in a fast-growing market, you will make money. If you invest in an amazing stock in a fast-growing market, you'll get rich. Therefore, always check the market. With buying houses, location, location, location. With buying stocks, the market, the letter G. I already mentioned the new letter, the G. This letter is added for one big reason. Nowadays, we are living in a fast world. A world in which everyone can invest, buy and sell with one click on a button. This means trading is bigger than it was ever before, and we need to take into account it will grow and grow and grow and grow. People always look for easy money, and therefore charts will go up and down faster. Timing is key. If you are also able to think a little bit as a trader, you'll be rich. I promise you. Therefore, the G is for graphic/chart. Always look at the chart before you invest. If you are able to time your purchase at the right time, you can make an additional amount of money by doing nothing. Sometimes it saves you 20%. Stock selection in 6 steps. Step 1. Earnings. 5 minutes. To be able to invest in a stock, you need to know their earnings. What is their profit and what is their quarter-over-quarter result? Go to the website of the company in which you want to invest. I always prefer you to look on the website of the company itself and not on your broker's account. There are always small mistakes in those numbers. Getting it from the company itself is like drinking from the source. While you are on their website, check the quarter-over-quarter results. Is it increasing each quarter? And by how much? Please keep in mind that the higher the growth, the more potential of making money on your investments. There are 2 other important numbers in their result sheet. What is the net profit doing? Is it stable as well? We prefer the growth of the net profit in line with the earnings of the company. The net profit you can find after all the costs are taken off from the earnings, normally below on the complete sheet. Just look if they are growing as well in line with the total earnings. Growth. Lately I made a mistake myself. I bought a stock from a company who had good numbers, but their expenses were increasing rapidly. I thought it was a temporary thing, but it wasn't. They bought me out. Luckily I had a good entry and didn't lose any money, but still it was stupid that I didn't see it. Hopefully I learned from this mistake. This brings me to the following. Always look at their quarterly costs. Is it increasing? Be careful. Sometimes it's a good thing because the company invests, but normally when the costs are higher, there is something going on. It's a good way to see if something is going wrong in the company when their expenses are exceeding rapidly. If that happens, think twice before getting into the stock. Step 2. Study the market. 5 minutes. What is a market? A market is an exchange where buyers and sellers come together to buy, sell, and trade goods or services. The stock market is not that different. Instead of buying everyday items such as food and clothing, you buy complex items such as stocks and bonds. Markets are essential for the functioning of an economy, as they offer an efficient way to move resources and goods within an economy. The reason for this introduction is that the market is a living organ, which sometimes flourish and sometimes may have difficult times. If the demand may grow in the future, it's wise to invest in those markets because prices will rise together with the demand, which increases the prices of the products which are sold in this particular market. That growth is related to the earnings of the company you invest in. Therefore, it's important to always check the forecast of the market you invest in. I recommend forecasting 5 to 10 years from now. You can easily check the forecast with Google, put your question in the search bar, and a lot of articles pop up on the market predictions for the coming years. Interested in the upcoming steps? Thank you for listening to the free part of my audiobook. Do you want to read the complete book? Please go to my Etsy page via the link in the description. And don't forget to subscribe and follow my channel for more books to come.